Welcome to Markets Now. I'm Michelle Rook along with Scott Varilek with Kooima Varilek. We have livestock higher grains setting back here, and it looks like, Scott, we're taking out some weather premium in the grains.
Thanks for having me, Michelle. And it does feel like some of the weather premiums are coming out of the market. We've made it through our hot, dry week that had been forecasted, had been talked about, but I have to believe that we're going to enter Sunday night to look at the forecast, and it's not going to be any better as far as the bullish standpoint than what it was this last Sunday. When you're looking at that long stretch of hot and dry, we've got some cooler temperatures. We've got some chances of rain, several different times coming up in the next few weeks. So I think that the market needed to pull some of that premium out. We're getting towards the end of the season. Weather premium can play more of a factor in soybeans right now than it can in corn. Yes, some moisture now could put some final bushels on the corn crop and help it out. But we're getting towards the end of this season, and we're going to have to make a decision on what some of these yields are going to be. We're going to see the crop tours. We're going to have a lot of that in our ear coming up pretty soon. So I think some of this, we did need a little bit of a correction. We have a big enough area that is sitting pretty good in crop condition status, in my opinion. So needed to pull some of that out, and it's going to need a different story other than the weather from here to try to prop it back to the upside.
Yeah, and technically we closed the December corn contract below the 100-day moving average yesterday. Soybeans are below the $14 mark. So do you think there's more downside risk, and will the funds keep exiting some of these longs in the beans?
I do think that there's some more risk to the downside. I think that I'd be more inclined to say to be looking at the risk to the down versus the up. At this point, broke some technical support, as you said, in the corn markets and some trend lines. Soybeans also breaking some trend lines. So then we start turning towards the moving day averages to see which ones are holding. So far, the 20 days been holding the soybeans and some of that sector. The soybean oil, soybeans has not held in the corn market. So I think the funds have already added to some shorts is what the estimate was in the last few days, and thought maybe that unwinding of longs in the beans it's what's next up is what we all kind of thought might happen. And that's maybe what's happening the last couple of days with the down, that the time of year where funds can start to step aside. We can start to talk about harvest pressure as we get near that here in a couple of months. So it does look like unwinding. And some of this chart damage, technical, marks that have been taken out. I'm more worried about that downside risk than I am up at this point.
The caveat to that, though, is if we get a sudden change in the weather, especially longer term, or if we get a change in what's going on over in the Black Sea. And we saw a little bit of that today already, didn't we?
Yes. I mean, the subject to change is absolutely right in all of these markets. And you can just feel how jittery the grain markets are, especially this summer. I mean, you've seen the wild swings, the ups and the downs. It seems like your bulls and your bears are both feeling like they got beat up this summer and not sure which one's even victorious yet. We had there was an explosion in Russia here just about an hour ago as we record this, and uncertainty of what that is. Where is that part of the war, or is that just an explosion? And it's an important area to the wheat market. So that little bit of news took the corn, rallied at 15 cents. We got the corn higher on the day. The beans crawled back. The wheat rallied 20 cents. So in that quick of a manner, you can see the market rallying, and you have to quick look around for the news and find out what it is. So now it seems to be calming a little bit again, as there's maybe this isn't war related. Maybe it is. Now we're sort of drifting back lower again. But yeah, those kind of stories can pop up and make some wild swings in this market that we seem to be used to all summer.
Yeah, it has been a volatile one for sure. Cattle market, let's move over there. We're to the plus side this morning. Of course, the market's waiting for cash trade, and actually it looks like feedlots kind of have the leverage here, right?
Yep, that's what it feels like to me. The feedlots are very current. We've been selling cattle lighter. They make really good money at these prices. So guys are inclined to say, hey, I'm going to take some of this and cash it in and pull ahead a little bit, sort a little harder, and take advantage of some of these prices and take a $450 a head winner just for as a rough estimate of some of these guys are seeing. So it's keeping us wanting to sell cattle. And we've also seen that if you hold out till Friday, the packers start to squirm a little bit more, and then they will pay up on a Friday. Because if you're selling on a Tuesday, Wednesday, you're getting beat later in the week by somebody else selling a higher price. So holding out, we're current. We don't have to sell cattle. We're going to wait till Friday to see some action. There's been some 292 bids in the meat. Mostly just I just keep hearing people passing those bids. Some 186 bid live in the north. That's also passed. I think it's more like 188 to 190 is what it's going to take before some of these producers start taking some of these prices. So leverage still in the producer's hand.
Yeah, and futures at a discount, that should continue to be supportive here, as well as the fact that corn market's back lower, so feeders are higher, but that cash feeder market has also been on fire. Is that going to continue?
Yes, I think it will. We know we have tight supply, and that's going to be the case coming into the year. We haven't even seen the tighter numbers yet. We're still seeing that year over year. So cash feeders, every time you're watching some of these video sales or talking about contracting some cattle, it makes you sweat a little bit when you see how high these feeder prices are getting, and it's much deserved. Don't get me wrong there. It's been needed to try to create some incentive to rebuild this cow herd. So are we going to see that or not? Is it time to start pulling some of these heifers away from the sale barn and turning them back into cows? It does feel like we've had some moisture shift. So that's gonna create some some of these feedlots or some of these cow calf guys, you're going to start to look at that. The hay costs, the feed costs were just too high, and it was easier just to cash it in and sell some of them. But I think we've reached the point now to where we can start to think that way, that some of these heifers might not be available to go to the feed yard coming up this fall, and some of these big runs. Trying to look at some of these video sales to see what the weight is versus steers that are offered versus heifers, and maybe saw our first sign of that here this last week, that maybe there's going to be some heifers that are going to be kept back, and that just means less feeders available even yet coming up this year. So we could be coming into that year where this is going to be the tightest. I haven't stuck my neck out there and said that yet, but this is the first time I'm starting to feel like, okay, maybe, and it is a futures market, so we know that it's going to act ahead of when that actually happens, but be watching that this fall to see if the heifer retention is happening or not.
You bet. So from a technical standpoint, let's go back to live cattle. What are you watching here in terms of support to keep the funds defending their long positions, though?
I don't know that I have a specific line yet. We've always been able to fight back pretty well, but I think these upper 170s is an area that it's got to hold. I think as it gets below 180, you start to check yourself a little bit and decide, okay, is this the real break or not? But I mean,
that's what I'm wondering.
The feeders have always fought back. I mean, all these blow off tops, like we've talked about, we've been able to fight them off and rally back, and the feeders are still the leaders. I still think there's plenty of strength there. Also, my negative corn bias is probably going to land in that too, but I don't feel like the feeder rally is done, and that's going to prop things up. So I don't have a line in the sand yet. Am I going naked because I think the market's going higher as far as protection? No, absolutely not. We've got too much money stuck in and invested that if we see how much the grain can move when there's just one explosion in Russia. We know that kind of news can happen in the cattle too. So being sure to tread carefully bullish, I guess, is where I'd be at.
Gotcha. Let's end on the hogs. Of course, this seasonal cash rally has lasted longer than it normally does. So, how much longer does it last? Does it keep pulling the board with it? And these discounts that we have in the back months, obviously there's a lot of room to run there yet, isn't there?
Yep. It's staying stronger than I expected. For sure. It's an index driven market. The cash and the index has proven that it wants to stay at a higher level, that this is a real market that's in better shape than is expected. So we drag this out through the summer, and every month that comes up next has to catch up and close the gap. Now, this is always the trickier time between August and October. You see that large discount, that large spread to wonder. And two-tiered kind of market is a word that you had used earlier, and I would agree with that, because we're still liking this cash is higher price now. We know more supply is coming. October needs to carry a discount, but how much of a discount will be the question. But as the index crawls north of where the August contract is at, October does start to creep just a little early because low 80s is quite a ways away from where we're at. So closing some of that gap I can see, but it'll take until September. I would say the beginning of September before October is really going to set its eyes towards the index and decide if it needs to close the gap on a higher index or not. So don't think that overnight this October is just going to rally up, but we've had August break out of its little sideways range it's been in, and usually that tells me the next month is going to do it as well. So I think October can get a little boost here to try to continue a little bit of this rally, but I don't know if it's going to be long extended quite yet.
Okay, yeah, August did have a chart breakout above the recent highs here, and so we'll see if it keeps going. All right, thanks for joining us, Scott Varilek with Kooima Varilek. That's Markets Now.